First, this approach demands more time for monitoring price movements across various timeframes. Additionally, seeking extensive confirmation before executing trades might lead to missed opportunities, even if prices move in the anticipated direction. Another downside is the potential to miss many trades when overly refining the entry criteria. Now that we have fully covered all the entry setup options available for placing buy or sell positions in the market and have acquired a solid understanding of them, imagine we've identified a high probability trading setup on the chart that aligns perfectly with the criteria and rules of a high probability setup. What we're doing next is searching for an entry point and, most importantly, getting involved in the market. Before executing any trade, it's crucial to consider a key factor: invalidation. We need to be mindful of the elements and conditions that could invalidate our trading setups, potentially resulting in a losing trade. This applies to all our trading setups, even those that appear perfect and highly probable. If we identify any factors leading to invalidation, if we identify any signs of invalidation, it's a clear signal not to enter the market. So what factors can cause the invalidation of a trade? The first and perhaps most critical factor to consider is the time of day. Imagine you've identified a flawless and perfect trading setup, one that aligns perfectly with your trading plan, offering an exceptionally high probability of success. The price is on the brink of reaching your highlighted point of interest, and you've set an appropriately small stop loss, creating an ideal trade opportunity. However, there's a catch. The market lacks the required momentum and liquidity. This might happen during the Asian session or in the late hours, like around 12 p.m. or 5 a.m. In such cases, the likelihood of this trade becoming a winner is rather low. To trade successfully at the right times, you need to know how the market acts during different parts of the day. Each part has its own behaviors, like how things move in Asia, or when London has reversals or fake-outs. Also, it's important to understand when these trading times overlap, such as when New York and London are both active, and what usually happens during those times. This knowledge helps you make smarter trading choices and boosts your chances of winning trades. Before we delve into the next factor that can invalidate a trade, let's take a moment to explore these trading sessions and their behaviors. The Forex market operates 24 hours a day, 5 days a week, and is divided into different trading sessions based on major financial centers around the world. Each trading session has unique characteristics, and price behavior can vary during these sessions. There are 4 main trading sessions. The first is the Sydney session, which runs from 10 p.m. to 7 a.m. in the GMT time zone. This session mainly involves 3 currency pairs: the Australian dollar, New Zealand dollar, and Japanese yen. Next is the Tokyo session, which also runs from 10 p.m. to 7 a.m. in the GMT time zone. The primary currency involved in this session is the Japanese yen. Additionally, there is some overlap with the Australian dollar and New Zealand dollar pairs. Tokyo session is known for its stability and liquidity, especially in JPY pairs. Volatility can increase during economic data releases from Japan. The third major session is the London session, which runs from 8 a.m. to 5 p.m. in the GMT time zone. London is the financial hub of the world, and this session sees the highest trading volume and liquidity. It often sets the direction for the day. Price swings and trends are more pronounced. But before moving to the next, it's important to note a crucial step in your trading journey: backtesting your strategies. Before using a strategy or setting up a real account, it's recommended to backtest it at least 100 times. Backtesting helps traders gain insights and enhance their trading strategies. To help you with this critical step, we use the TraderEdge platform for backtesting our exclusive trading strategies and setups. If you're interested in using TraderEdge as your backtesting tool, be sure to check out the link in the description below. The fourth major session is the New York session, which operates from 1 p.m. to 10 p.m. in the GMT time zone. The New York session also has significant liquidity and is known for high volatility, especially during the overlap with the London session. Economic data releases from the US can lead to significant price movements. Also, we have overlapping sessions. There are times during the trading day when multiple sessions overlap, such as the London-New York overlap, which occurs from 13 o'clock to 17 o'clock GMT. These overlaps often see the highest trading activity and are characterized by increased volatility. Now, let's have a quick breakdown of prices' behavior during major sessions. Asian sessions. Typically, prices may consolidate or trade within a narrower range during the Asian sessions as liquidity is lower. Breakout moves often occur when the London session begins. London session. This is when the market tends to see the most significant price movements and trend formations. Many traders prefer to trade during this session due to its high liquidity and volatility. New York session. Similar to the London session, the New York session can also see substantial price swings, especially during economic data releases and news events related to the U.S. economy. It's important to note that while these sessions have their typical price behaviors, unexpected events and news can lead to sudden and significant price movements at any time. Traders should be aware of these sessions and their characteristics when planning their trading strategies and risk management. Now let's delve deeper into the details of invalidation. As previously mentioned, the first factor that can lead to invalidation is the timing of our trade execution. If a setup occurs outside of the optimal trading hours, we will choose to refrain from trading. For the London session, the most optimal time for trading is generally during the first few hours. This period often sees the highest liquidity and the most significant price movements. Many traders prefer to start trading when the London session opens at 8 o'clock GMT, because this is when markets tend to set the initial direction for the day. Major economic data releases related to the European economy are often scheduled during this session, which can lead to increased volatility. The most optimal time for trading during the New York session is typically during the overlap with the London session. This overlap often experiences the highest trading activity and liquidity. The first few hours of the New York session can also be favorable for trading, as this is when U.S. economic data is released and can result in significant price movements. It's important to note that after 17 o'clock GMT, liquidity can start to decline as the New York session winds down. Personally, I prefer to not trade after 5 p.m. because, particularly after that, most likely price will consolidate around major zone that has been formed through the day until London session starts at tomorrow. And for the Tokyo session, the most optimal trading time during this session is generally during the overlap with the London session, as both sessions see higher liquidity and potential for price trends. The next factor to consider is news and economic events. Forex markets often experience increased volatility and price fluctuations around the time of major economic releases. Economic news and events are critical drivers of price movements in the Forex market. Traders need to stay informed, develop strategies that suit their risk tolerance, and exercise caution when trading around news releases. If there is This is due to the significant increase in liquidity and volatility such an event can create. Let's see some important economic news releases that can significantly impact the Forex market. First, we have the Non-Farm Payrolls, NFP, published by the U.S. Bureau of Labor Statistics on the first Friday of each month. Measures changes in the number of employed people in the U.S. The second one is interest rate decisions, announcements by central banks regarding changes in benchmark interest rates. Changes in interest rates can influence currency values as they affect capital flows and borrowing costs. Number 3 is Gross Domestic Product, GDP, measures the total economic output of a country. GDP releases can indicate a country's economic health and influence its currency value. And the next economic event is the Consumer Price Index, CPI, measures changes in the prices of a basket of goods and services. What I highly recommend during a news event is to wait patiently for the excitement and volatility created by the event to settle down. Then, assess the situation and look for potential entry points. Avoid using pending orders like sell or buy limit orders during a news event. The third factor that can lead to invalidation is a sudden and rapid push into a point of interest. Price behavior is crucial, especially when it approaches our identified point of interest. Imagine the price suddenly gains strong buying momentum and moves directly into your identified bearish point of interest, from which you plan to enter a short trade. In such a situation, you should reconsider that zone as your point of interest and avoid executing trades from there. The rapid and massive move toward that area could keep pushing the price upward as it sweeps up buy-side liquidity, increasing its speed and volatility. This increases the likelihood that the price will use your identified point of interest as another source of liquidity. The next and last factor that can lead to invalidation is the fundamental. Traders should consider fundamentals alongside technical analysis in their trading, because fundamentals provide essential context for understanding market forces, identifying long-term trends,